Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 17th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here the ES remains within a range that has developed over the last couple of weeks. This trading range here basically has developed since the FOMC key level came online. 1103 was the FOMC key level. That's the range right there. The pullback recently has led to a nice bounce. We mentioned before on this day here that this bounce could lead to a continuation to the edge, which is 1175s. Yesterday's high, I believe, came just shy of that area right there. So the high right there being 975. So it was 2 points off of the high there. The expectation is we likely still continue to push toward the edge, but we may remain within this trading range before we're ready to see a move upward or perhaps a failure back down. So right now still showing signs of strength, but very muted price action right now. The volatility is low. You can see another inside day developing at the moment, 34% of ADR, and the range at the moment is all of 12.5 points. That is super tiny compared to what we're used to seeing here. And again, if we were to see a bit more selling pressure here, that could provide an opportunity for bulls to come in, defend, and attempt to push prices back toward yesterday's highs. So, very muted price action with an upward bias until proven otherwise. Here's a look here at the NQ. Now with the NQ, this one's trading 29% of average range, where the ES was trading 34% of average. This NQ trading 29% of average range, just 59.25 points of total range here, heading into the RTH Open. That's super narrow, not quite inside day, but very narrow. Upward bias overall. The trend remains very strong. You can see since the FOMC key level was minted, we had a nice rally, squat day, back to the level, and then bounce. Again, the expectation was that we would likely continue higher toward 400 to 450, maybe as high as 500, and then maybe start to work back down within the range as we continue to trade within this range. Overall, an upward bias with more upside to come, but again, very quiet price action today, low volatility, just 29% of average range for the NQ. If we take a look here at crude oil, this one right now trading 43% of average range, so narrow as well, down about 1% right now. Let's move this over a little bit right here, squish this a bit. What you'll see here with crude oil is that we have mostly traded within that range, and it's not moving over. There it goes. It is mostly traded within the center of this range around that 81.50 to 80.80 level. 80.80 is the FOMC key level right here, and you can see how it's traded right through there, although this is very compressed. Let's bring this back out. Okay, here we are, pulled out a little bit here. What you see is, again, we were at the middle of that range, chopping around that FOMC key level, the 81.50 sticky level. What I mentioned was this is going to be a lot of chop until we get to an edge, either above 85s or below 78s. And we've seen price push downward here overnight there. Looks like a rollover, gap down type of situation here. We have this low right there, which is 78.18. And today's low, currently 78.53 here. We have the shot to take out that low and drop further into this LVN, and that would be a great opportunity to fade it back. Right now, 81.50 is the HVN here, and is that sticky level that when it gets too far away, it snaps back to 81.50. Gets too far away, it snaps back. So right now, we're in that zone that if it just got a little bit lower here, we'd be cleaning out some lows. We'd be tasting the middle portion of the LVN and snapping back to 81.50 and perhaps a move back toward 85 to 86. So right now we're on the swing move down. If we take out this low here, that could provide a great opportunity to fade it back up. So we'll continue to watch crude oil here. Additionally, here is gold. Right now, gold up about 0.5% testing a very important level the previous session here with a big outside day down. So it had a major rejection of those highs, 1879.50, a big time push to the downside and a close below the previous session's low. 2-day squat bars there. So again, bearish outside day, and now price is testing the midpoint of the previous session's range. Is this going to offer an opportunity for bears to defend and push this thing lower, or is the bull trend here very strong and we're about to push this thing back up? So again, we've talked about how strong this market has been, but how, at least in the short term, but how after every strong move we tend to see weakness come into the picture here ever since that August 2020 high. So how's it going to behave this time? We've also seen a continuous pattern here of lower highs. For the most part, is this another one of those lower highs that's coming into play? So yesterday's midpoint, very important here today. That's going to be 1865.30. Can price get above that zone? If not, this might offer an opportunity for bears to defend for a push downward. How far do we go? 1820 is the target. You have a strong low here and a rally. You have a strong high and rejection here. Oftentimes what will happen is you snap back to the midpoint of that pattern, and now we have ourselves a new key range to work with. So that's the high, that's the low, this would be the mid at 1820. We're looking for a snap back to that level. Will it happen in one day? Probably not. It's probably a 1 to 3 day type of move, depending on how it plays out. If price were to close beyond this midpoint today, above it, then we may be looking at a further squeeze until proven otherwise. So right now, keeping an eye on 1865s here for early directional bias today. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.